Good morning and welcome to this Monday, May 4th edition of Trading Places Live at earningsbeats.com. I'm Tom Boley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, we got futures down a little bit again this morning, not too surprised. Had a big reversal last week off of the 20-week EMA. We had cleared it intra-week. We failed to hold on to it, came back down. This certainly seems like an opportunity for the bears, maybe to try to gain a little bit more control of the action. I think longer term versus short term, I have some different thoughts about the market. I think longer term, we remain in a secular bull market. I expect we'll eventually break out either later in 2020 or sometime in 2021. Short term, intermediate term, I think that's a lot dicier. And certainly we could see more volatility, back and forth action, but we'll get into all that in just a couple minutes. I do want to just point out a couple of things, couple of announcements before we get going. First, if you are new to Earnings Beats, I do want to just point out that if you come over to our homepage, earningsbeats.com, you can sign up for our free Earnings Beats Digest newsletter. It gets published every Monday, Wednesday, and Friday mornings. On Friday, I published an article talking about American International Group, AIG, and how I really think that company is set up for failure heading into its earnings report. They report after the bell today. Stock just doesn't look good to me. I think that it's been distributed heading into its earnings. Relative strength is weak. Its industry group is weak. So it's just a bad stock within a bad group, at least on the charts. And that tells me Wall Street doesn't like what it's been hearing from the company, and I really wouldn't expect too much out of that report after the bell today. On the flip side, this morning I wrote about Regeneron Pharmaceuticals, and this is a biotech I've spoken about quite a bit. I really like this company. They're going to be reporting their earnings tomorrow. Have no idea what the earnings are going to do or whether or not the stock goes up. But what I do know is that the stock's been moving higher. It's been showing signs of accumulation. It's in a strong group. And I suspect even if it gets sold off after earnings, I would suspect that you're going to see some buyers jumping into the stock. So really the tale of two different stories here. One being very bearish technically, the other bullish. So if that's the kind of things that you really are interested in, relative strength, accumulation distribution. A lot of times we'll talk about earnings. Those are the things really that get featured in this Earnings Beats Digest. So if you're not already a subscriber, it's free, no credit card. Seriously, just check it out, see what you think of Earnings Beats. Second thing I want to talk about, or second announcement that I have, is later today I will be I'll be on another Stock Charts TV show, Your Daily 5. So every day they have a new guest come on just to share 5 charts that they want to share. And so I'm going to be doing that later today. So if you go over to Stock Charts TV and go down to 1 o'clock, 1 p.m. Eastern Standard Time, Your Daily 5, that's when it will air. I'll actually be recording it a little bit ahead of time. But I'm going to talk about big picture charts. I'm not going to, talk about an individual stock trade here or there. But if you are interested, again, if you're new to Earnings Beats or you're new to me, and you want to just kind of get a feel for how I approach the market, I think you'll really find the Your Daily 5 show later today to be of value. So that'll be airing at 1 o'clock. They do have replays later in the day. I think there's 2:30. I don't know. Maybe there'll be, and then at 5:30 there's a replay. Maybe another one later. I don't know. But check that out. So again, 1 o'clock Eastern today. So just about 4 hours from now, I will be featured on Your Daily 5. So check that out. All right. Let's get into the daily market recap. I will say this morning, futures, last time I looked just a few minutes ago, Dow Jones futures were down a bit over 200 points. It was a little bit less on the S&P and the NASDAQ in terms of percentage losses. Warren Buffett over the weekend said that Berkshire Hathaway has completely divested itself of airlines. So the Oracle of Omaha, when he says that he can't find value in airlines, and he sells everything he owns in all 4 airlines. I think that should be telling all of us something, that this paradigm shift that we are seeing as a result of the pandemic is going to have a very significant and lasting impact on airlines. Saw a lot of groups last week bouncing that had struggled. Most of the leadership that came last week came from areas of the market that had been struggling badly since this pandemic hit late February into the early part of March. Airlines was not among those groups. Even with the beaten down rising last week, airlines still struggled. And then you come out, you hear the news that Berkshire Hathaway has sold all of those stocks. Now, I've been talking about accumulation distribution, and I've talked a lot about airlines and individual stocks in the airlines and cruise lines and so forth, how those accumulation distribution lines have been going down, whereas other stocks, you're seeing those accumulation distribution lines going up, even though all stocks were going down during March. I think that was telling us a story. And I think what Warren Buffett had to say over the weekend is confirmation of the story that those charts were telling. They have been selling. They have been selling, and they don't have small stakes. I think Berkshire Hathaway had up to 10%. I don't know if 10% of all the airlines, but I think roughly 10% of each of the major airlines. And they sold them all. And that's what was showing up in those charts with the accumulation distribution. So some stocks you were seeing gap down at the open and then being bought during the day. Others, like airlines, were gapping down and continuing to be sold. And that's the difference. So, he did come out, Buffett did come out and say that they've got $137 billion in cash, and they're really not putting it to use right now. I don't know, maybe that's maybe another sign to be a little bit more cautious in the near term. Warren Buffett's never really been known for his timing, but I think he has been known for picking some really good industry groups and really good stocks at, key value points. So maybe he's thinking that over the next few months, we're going to have an opportunity to get in some other stocks cheaper. But one thing's for sure, he's not interested in airlines right now. And I'm certainly not interested in airlines. And I wouldn't be interested in airlines anytime in the near future. The other thing on Thursday and Friday, we saw a return to the, I'm going to call it accumulate new age post-pandemic stocks and sell all others theme. That's what we saw in throughout most of March. And that really started to resonate again on Thursday and Friday. I mentioned in the War Room on Saturday when we had our webinar that, our weak accumulation distribution chart list did not perform well after the opening bell, but our strong accumulation distribution chart list performed much better on a relative basis, much, much better. The best that it had in probably the last 10 days or so on Thursday and Friday. So it seemed like that was the shift back to those strong accumulation distribution stocks. I think it's that theme that's starting to reemerge again. Today, we're looking at another gap down. It's going to be very interesting to see what happens after the opening bell today. Do we see the same thing that we've been seeing where money rotates into some of the stronger areas? Broadline retailers, specialty retailers, a lot of the healthcare areas, toys, are those the areas that are getting the money while we see money continue to rotate away from the airlines and the hotels and the recreational products and the gambling stocks and so forth? I think that's going to be very telling today to give us a sign on whether or not that is returning back into the market. If so, that strong AD chart list is going to be worth its weight in gold as we go forward. So I'll be watching this and passing along each day in the daily market report and through the shows. All right, daily market recap for Friday. Been looking at the charts long enough. Let me get into them. Dow Jones down 622 points, back down to the 20-day moving average. S&P down 81 points. NASDAQ down over 3%, more than both the Dow and the S&P, but still well above its 20-day moving average. NASDAQ lost 285 points. Mid caps lost 3%. Small caps 4%. So again, returning to that theme, these were two groups that had been lagging. We saw a little bit of relative strength of late, but Thursday and Friday, we returned back to some underperformance. And you can see in both cases, accumulation distribution rolling back over again, especially on the mid caps here. Among the sectors on Friday, staples, communication services, healthcare. These are all groups that back, in March when the market was really starting to get hit, these were the groups that were leading on a relative basis along with technology. We also saw a little relative strength in materials on Friday. The weakest group, energy. Energy was getting hit hardest back in March, and now we're starting to see it again with that 5.7% drop on Friday. So you want to be careful, especially if some of these areas of the market begin to lose some key moving averages before the major indices do. I think that's just another sign that you've got relative weakness there, and you want to be careful with that. Look at the XLE accumulation distribution. Compare that to these others. I mean, yeah, staples have gone down a little bit, but I think the overall trend is up. Communication services, I think, is up. Healthcare overall is up. We saw a little bit of weakness here. I'm going to say the last week to 10 days, maybe even 2 weeks. On a relative basis, accumulation distribution came down a little bit, but bigger picture, I would expect that this is a group, particularly healthcare, that will likely do better after the opening bell than some of the other areas. I think that's where you're going to see some money rotate. So keep that in mind as we go forward. All right, 10-year Treasury yield. We only had one economic report out this morning, and that was, well, it's due out. It's not out yet. March factory orders. The estimate is from minus 9.5%. So up until this morning, factory orders we've only had through February. Last month's report was flat. So no increase, no decrease. That's going to change in March. We know it's going to be down. The question is how much. The consensus range is from down 8.1% to 12.6%, with the consensus average being 9.5%. That report comes out at 10 a.m. We'll see what happens there. I don't even know when these reports come out if it really matters. I think the market already knows that March reports are going to be horrible. And I think that the second quarter is going to be worse than the first quarter. So, and I think the market is expecting that as well. And if you say, well, why would you think the market's going to go up if you think the news is going to just continue to get worse? Well, I think the market already knows that the news is going to continue to get worse. One thing you got to keep in mind, I was reading an interesting article over the weekend talking about the valuations and how the lower the interest rate environment is, the more valuable earnings are. And that's something I talk about a lot. And I think when we come out of this, and maybe not even when we come out of this, there are a lot of companies benefiting from what's going on right now. Check out the chart of Wayfair. Wayfair is going to be reporting their earnings, I think, tomorrow. I think it might be tomorrow after the bell, or I'm not even sure. Maybe it's before the bell. But anyway, Wayfair, look at this since March. So it went down with everything else, but it never put in a lower low on the accumulation distribution, even though the stock fell from 110 down into the 20s. The accumulation distribution never fell to a new low. And now with the stock rising, you see hardly any filled candles. So the stock is being bought throughout the day. And look at the accumulation distribution rising. They're going to be reporting their earnings. And with all the stay at home and buying online, this is a company that's benefiting. So yeah, you've got airlines, you've got cruise lines, you've got hotels, gambling stocks, mortgage finance. You got a lot of these areas that are struggling because of the pandemic. Wayfair and many other companies are benefiting from it. And so that's the rotation that's taking place in the market. You have to be aware of it, because when you start seeing some of these reports, some of these earnings that come out for some of these companies, it's not going to look like a bear market. It's going to look like a raging bull market. And these companies that can continue to grow their earnings in a low interest rate environment, that is why you're seeing such a rapid increase in the prices of these stocks. I mean, another company that's just been killing it was Wingstop. I mean, look at the company. It's a restaurant. You're like, how can a restaurant be doing well? Well, right after the pandemic hit, they had a 3-week free delivery. That was their marketing thing for 3 weeks. And I think they got a lot of folks supporting them. And they actually grew their earnings. Their earnings went up because of this pandemic, because, they didn't have, I guess, as much labor. You're just delivering. You don't have as many people in the store. I didn't go and look at the report. And actually, I'm not even sure that I think they may report coming up. I'm not sure if they reported or not. I've looked at so many reports lately. But I think they did announce that they were going to have better than expected earnings. I don't remember if they've actually reported yet or not. I don't think they have. But anyway, there's a lot of these companies that for every airline and cruise line that's going down and looks horrible going forward, you've got other companies that are stepping up, making a lot more money in a very low interest rate environment. And money is pouring into these companies. Look at Wingstop's accumulation distribution. Huge, huge move to the upside. So don't get caught up so much in the news about the airlines and the cruise lines and the impact there. There's still a lot of areas of the market that are benefiting and doing well throughout this pandemic. And now as some of the states are beginning to open up and other areas of the market start to pick up a little bit, even if it's not where they were 2 months ago, I think it's going to continue to create a more positive atmosphere and spin on things as we look at Wall Street going forward. So I still think we are long-term in this secular bull market. Short-term, yes, there's still a lot of questions. The coronavirus obviously is the biggest one. You know, are we going to have a vaccine? There was a report over the weekend. One of the large pharma companies came out and said anybody who's had this likely will have immunity going forward. Likely, not a guarantee, but likely. It was, you know, more upbeat news, positive news. I don't know. We'll see how it all plays out. Obviously, there's the potential for more bad news. We don't get a vaccine. The treatments really don't prove to be that great going forward. And then we have a resurgence in the fall. Or the stay-at-home restrictions being lifted too early create a resurgence in cases. I mean, obviously, there's some negatives out there potentially, and I think that's why the market's going to struggle over the course of the next few weeks, maybe a couple months, maybe the summer. Might take a little while back and forth to consolidate. I don't think we go below that March low, though. I think that the March low that we saw on the S&P 500 down here, I think that is in. Could we go back down into the mid 2000s, you know, 2,500, 2,600? Yeah, I mean, I'm actually thinking 2,650 to 2,750 is kind of where I think we could stabilize. But, you know, could we go back down and maybe even get to that 2,450 area? I suppose it's possible. We'll see how things play out. But I do think that there are a lot of folks accumulating when the market sells off. I think you're going to see some of the groups like the airlines roll back over again. I don't think they have sustainable moves to the upside, just my opinion. But I do think there are other areas that absolutely have sustainable uptrends. All right, let's take a look at some of. Well, I want to show you a little bit about what I was talking about last week, being a strong week. So this is the industry group chart list on a relative strength basis. So it's showing each of the industry groups relative to the S&P, ranked from worst to best over the last 3 months. So you can see right at the top, recreational services. Then you've got a real estate group. Then you've got airlines, coal, oil, another real estate group, consumer staples, that's tires, aluminum, insurance. There's the mortgage finance I talked about earlier. Hotels and lodging REITs, aerospace, haven't talked about them, but you know, just the list goes on and on. As you can see, these are the ones that have underperformed. Now let's take a look at what happened last week. There's coal. You know, here's the real estate. There's your recreational services. The worst group over the last 3 months was the third best group last week. Home builders, furnishings, oil, you know, all these groups that have been laggards for the last 3 months, they all kind of shined last week. It's almost like the market said, okay, these have been beaten down. Let's go ahead and give them their little bit of love for a week. By Thursday and Friday, that love was starting to wear off, though, I can tell you. And this morning, based on what's going on with the airlines and cruise lines, definitely is rolling back over. But whole point here is that last week, you know, if you're looking at the strong AD chart list or maybe the strong earnings chart list, and you're wondering, you know, the market was going up, my account wasn't, or even my account was going down, that was the reason. The market just completely did an about face last week. Really, again, for probably the last 10 days. But Thursday and Friday, we saw that begin to reverse back again. So if I just pulled up one day, you can see mining shares, they've been leading. They were back on top. Toys, talked about toys. There's toys. Probably going to see, down here is healthcare. There's your pharmas. What else did we have here? A little bit more of a mixture. There's internet stocks, computer hardware, specialty retailers, all outperforming again on Friday. And if we did Thursday, it'd be a very similar story. So we are seeing that rotation back. That will be one of the things I really focus on this week, is if the market rolls back over again and we start to see some of these gap downs and moves lower, do we see that same rotation away from the weak groups and into the strong groups? If so, that is just further confirmation that what we're doing here at Earnings Beats is the way to go in the market. All right, let's take a look at some earnings reports. Earnings are really going to pick up later this week. Tomorrow, Wednesday, Thursday, just a ton of reports out, over 1,000, I think, in those 3 days alone. Today, a bunch of reports are out. One company reporting, Sempra Energy. When I was looking pre-market, I didn't see a lot of big names that I'd be interested in, really. Not really looking for any of these companies to blow the doors off earnings. When I look at something like SRE, we did top on our accumulation distribution all the way back beginning of February. Been a little bit of a slow downtrend. I mean, this stock hasn't done as bad as some areas of energy, utilities, whatever. But it's doing, it's starting to roll back over. It lost its moving averages. I'd watch probably 117 very closely on SRE. If that level fails, then I think you could start to see some acceleration in terms of selling. Company out this morning, Ferrari, ticker symbol. I love the ticker symbol. Race, RACE, broke down on Friday. I think the stock was up this morning. Let's see what we've got here. Yeah, stock up 2.5%, 152.79. So as we go back and look at the chart, we're still below the 20-day moving average. I don't know. I think this one's probably going to do some more consolidation. If I was in autos at all, I would be looking at Tesla. Race, look at the AD line going down. I just think this one is one that probably I would tend to avoid. Look at something like Tesla, which has come down from that February high, but over the course of the last 6 weeks, we're actually a little higher than we were at the low on that AD line. Last 2 days, we had a bearish engulfing candle on Tesla and then some more weakness on Friday. I think short term, we're just probably going to sideways consolidate, maybe some kind of a triangle. I think longer term for Tesla, but I fully expect that this stock is going to break out. I think that when things start to recover and the market begins to feel more comfortable about the economy down the road, whether it's later in 2020 or 2021, this is a company that was growing its earnings, starting to grow its earnings very strong. Their recent earnings report came in well ahead of estimates. This is the type of company that I believe in a low interest rate environment could see huge spikes in its value. Now, this is volatile. So you could jump in at 700, you might see the stock at 500 later this week or next week. I mean, that's just the volatility that we have to deal with. But I would be interested in building a position. I do own Tesla, and if it weakens, I will add to Tesla. I like Tesla. All right. Let's see. How about Tyson Foods, TSN? So Tyson came out. You can see we could not break through. Here's that immediate bounce. Any stock that bounced back in mid-March and has not broken out above it yet since is one that I would be very concerned about, because if you look at the S&P 500, there was that initial bounce. We've broken out multiple times since then on the S&P. So if you've got a stock or you're looking at a stock that hasn't made that breakout, you know right off the bat you've got a very weak relative performer. Throw the accumulation distribution in here. This is a stock that personally I would not have owned going into earnings. I just wouldn't be interested in it at all. I haven't looked at it, but let's see what it is doing. Down 5.6%. So it's down $3.50, 56.60. And that will take it down here somewhere. I don't know. It looks to me like it's rolling back over. 52.50 is going to be a key area of support. If that's lost, I think you go all the way back down to 42.50. So be careful with Tyson Foods. Let's talk about a couple stocks that are going to be reporting after the bell today or tomorrow before the bell. Some that I'm going to be watching pretty closely. I already mentioned AIG because I wrote about it in the newsletter on Friday. So that was in the free newsletter, EB Digest. Again, go to earningsbeats.com and sign up if you're not already a subscriber. But here's a stock that couldn't get past that March reaction high, 27.50, starting to roll back over again. I don't like it. I think the stock is probably going to have some not so great news. You can see the accumulation distributions weak. I'm just not a fan here. What else? FIVN. One thing that we are going to have on Saturday in our war room coming up is Grayson Rose and Bill Shelby are going to join me and the Earnings Beats team in our war room on Saturday. And we're going to talk a little bit about some of the tools and so forth at stock charts. And I'm sure we'll get into some individual stocks. And this is one of the stocks that Grayson Rose really likes, I know, because we did a show, The Pitch, back at the beginning of April. And this was one of his 5 stocks that he liked back at the beginning of April. You can see where it was and what it's done. So this was a great call on his part. But look at the accumulation distribution. I couldn't disagree with him. I mean, big move up, relative strength's been strong. This company comes out with its earnings after the bell today. I would be surprised if we don't see a really good report with FIVN. Obviously, Wall Street's accumulating it for some reason. I think we're going to see a big report. Never quite sure what's going to happen with the market reaction, but if we react weak, I'd be a buyer on that weakness. Let's see, what else? Tomorrow before the bell, I mentioned Regeneron. This one's going to be reporting. It's pulled back here recently. Broke out, just above, well, actually maybe just below this 500 level, the 50-day moving average at 490. Stock got down just about 507 a couple days ago. It was up at 570 and change a week earlier. So this is one that's pulled back quite a bit. Look at the AD line. Look at all this volume coming in. I think Wall Street likes it. I would expect a good report here. Also, yeah, actually Wayfair. I pointed that one out already, but they do report before the bell tomorrow. Another one that maybe watch is Mentum Holdings. This one has been pretty good in terms of its accumulation distribution. It's one of our portfolio stocks, testing its 20-day moving average. Wouldn't be surprised to see a pretty good report here. I think this one, just Wednesday of last week, wasn't far from that February high. So this is one that might surprise with its earnings. All right, let's move on to the 3 you must see. We'll wrap the show up with that. Let's start with LIVX. These are companies, you can see the volume coming in here. This company has just been on a roll. It's on our strong AD chart list. You can see why. When it was going down, the accumulation distribution was going up. And now we're starting to really see it pick up with big volume. I don't like to chase a stock like this, but just know it broke out at about 230. So any kind of a pullback back into that 230 range would be very interesting on LIVX. It's a small stock, very aggressive, very volatile. So make sure that you are the type of trader that's okay with that kind of risk. It's going to be much riskier than many. Another stock, this one reported last week, Band, which is bandwidth. Another one, huge move back up here with in terms of price action. Also, the AD now at a new high. Earnings came out, very strong reaction. I think short term it might struggle at 90. We'll have to see if we can get through that level on a closing basis. But another one that if it pulls back, gets anywhere near that 20-day moving average or even gap support. I would say $82 gap support might be very intriguing entry into that stock as well. And then finally, Teladoc, TDOC. I like that reversing candle on Friday, that bearish engulfing candle. A little bit of a hammer on Thursday. And this is kind of showing what I was talking about earlier, how the theme was beginning to change on Thursday and Friday. Long tail to the downside. Teladoc is bought up during the day to come off of that low. And then we gap down on Friday, and Teladoc is bought throughout the day. And that results in a strong AD line. So Teladoc is your final 3 you must see. And so we're going to go ahead and wrap it up. Again, make sure you check out the show later this morning over at Stock Charts TV. I will be on there doing Your Daily 5, 1 p.m. Eastern. You can check that out. And then also Earnings Beats. Make sure you sign up for our Earnings Beats Digest free newsletter. Everybody have a great day, and I'll be back later for Earnings Beats members with the Daily Market Report. Have a great day, everybody. Happy trading.